Hello, everybody. Welcome to Thursday. The S&P 500 was down about a 0.5% today. Just really kind of reacting to a couple things. The producer price index, which is the wholesale inflation number that comes out usually the same week that we get the CPI number. That was a little bit hotter than expected in some areas. A couple of different drivers there, but not enough that the market thinks the rate cut won't happen. But certainly, we're still seeing sticky inflation to a certain degree, kind of in this 2 to 3% range on a pretty consistent basis, where they really want to get it down into that lower 2% range. But we also had first-time unemployment claims, which comes out once a week, which is a little bit higher than expected as far as that goes, and higher than it's been for a little while also. So we'll see how that plays out because again, the Federal Reserve is looking at employment on one hand and inflation on the other. That's their dual mandate. So if you have a higher number of people filing for unemployment, the Federal Reserve might be even more inclined to do that quarter point rate cut. And honestly, I think at this point in time, that's what they're looking at is more the employment market than the inflation area. Again, I've been saying for a while, I think they're okay in this 2 to 3% range. At least that seems to be what they've, signaled altogether, even though that's not what they've said. So nonetheless, tech stocks have had a really good run here, and they backed off today. The kind of off about 0.7%, a little bit more than the market today. I do think that, one of the things we see is these big tech companies and big companies in general, especially tech companies, do better in times where there's some uncertainty. So I think, we're going into the first half of next year with this new administration, some uncertainty on what's going to happen, how that's going to work and how these things might play out. You might see tech stocks do quite well in that environment just because people park their money somewhere. And in this case, really the big money that's moving around, and so because of their cash flow and their name recognition, their balance sheets, and all those types of things, they're seen as kind of safe havens. We saw that in the pandemic. I mean, Apple and Microsoft, for example, dropped a lot less than the market as a whole. So there's some relative strength there as far as that goes, and people want to park their money in these things. And then as the confidence comes in, you start to see a really big broadening of that. But I think it's kind of interesting that we're seeing a little bit more narrowing back to the techs, which haven't done as well for a little while as some of the other areas. But nonetheless, that's what's happening today. Not a bad day, obviously. We're right there, not too far from another all-time high. Market has been fantastic this year altogether. Matter of fact, if you look at the total stock market index, which the Vanguard's ETF is ticker symbols VTI, that's up 30.8% for the year, for the last 12 months. Sorry. So really, can't complain about that too much. So look forward to being able to see you tomorrow. We're doing our show tomorrow. The beginning of the show, I always do a summary of what I saw happening for the week, and then you can send in your questions at live, and we can try to answer them for you. Anything you've got about asset management, retirement planning, tax planning, those types of things. So look forward to seeing you then. Thank you very much.